You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. Don't get to hear that music as much here on the network, but it's fun to be back here on the old Options Insider Radio program. We're busy these days with a lot of other irons in the fire, including our great Pro Q&A session. Just got off a great one a little bit ago. So all of you out there in the Pro Q&A land, the secret club, hopefully you enjoyed that. If not, of course, you can check it out on your members podcast feed. Get, of course, Options Oddities, everything else we're doing out there live throughout the week, and a whole bunch more. But it is always fun to go back to the Options Insider Radio. Well, it is, of course, at the end of the day, the program that kicked off the entire network. Coming up in January, it'll be 15 years. Crazy to say out loud, but that's how long we've been doing this crazy options podcast thing. And there's always new stuff to talk about and always new people to talk to. So on that note, let's dive on into today's conversation. I'm pleased to be joined by two newcomers to the program and indeed to the network, Mr. Michael Izaki, the Vice President of Derivative Strategy, and Rob Hocking, the Head of Derivative Strategy over there at CBOE. Gentlemen, welcome to the Options Insider Radio program.
Hey, Mark, thanks for having us. Excited to be here.
And gentlemen, as we are wont to do with all of our first timers here on the network, why don't you go ahead and give our audience a brief, because we have two of you, a brief overview of your background in the options and derivative space, as well as what it is you do day to day over there at CBOE. Maybe Michael, we'll start with you, sir.
Oh, great. Thank you. So I got into options trading right out of university back in 1994, trading options on currencies. I started out with a company called O'Connor and Associates, who some of you may have heard of. Fast forwarding, after trading for about a decade, I moved into building a risk and analytics system called FT Options, which ultimately was acquired by CBOE. And that's how I got to CBOE. I work with Rob in derivative strategy, and I'll let him kind of explain the structure of the group and hand it over to him.
Yeah, thanks, Michael. Excited to be here today. So similar to Michael's background, I come to CBOE after 20 plus years in the trading side of the business, spent 10 at Goldman Sachs in index volatility trading, and then the last 10 on the trading side for working for a large prop firm here in Chicago running global volatility. And so both of us coming to CBOE, derivative strategy, what do we do? So we're kind of the solvers, the builders, and the educators around many of CBOE's products here.
Well, the right guys to talk to today, because we have some products to talk about, gentlemen. Let's get right to it. In case people have been living under a rock for the last few weeks, of course, we're here today to talk about all things Nanos. We've talked about it here on the network. Other people have been talking about it. But in case they somehow missed it, what the heck are we talking about? What are Nanos?
So yeah, thanks for asking. So the concept behind Nanos is really to change the perception of options and open them up to investors who have historically never had access or lacked comfort with the risks associated with, say, a bigger notional size contract. Much of what we've seen as of late and the influx of retail trading, between the top four retail brokerage firms, there's now over 150 million retail brokerage accounts. And if you include the more than, dozen smaller firms, that number goes well over 200 million. And as we've discussed with many of these accounts are too small to be able to take advantage of a broad-based index option, such as, SPY or SPX. So to appeal to this new investor, we came up with Nanos, which is a first of its kind contract, and it really represents a simple, easy, and affordable way to do just that, trade options. Simple because we plan to list fewer strikes than what we've historically done with our proprietary products, so investors aren't overwhelmed with too many choices at first. Easy in that these options will have short-term expiration cycles, so that the results are known quickly and investors are able to reposition often. And then last, affordable with moving to a 1 multiplier. Each at-the-money options contract will cost around $3. So that allows maybe people that were otherwise intimidated by options a way to trade them and really learn without having to commit, large sums of money.
It's interesting. We've been talking for a while on the network, and ever since the pandemic, of course, we've seen this amazing explosion of retail participation in the options market. And of course, it's fantastic. Everyone wants to work to try to encourage more retail traders to participate out there. And of course, we've also seen this rise of, call them what you will, the one lot traders out there, people out there also doing fractional shares on platforms like Robinhood. So it seemed like perhaps we were going to get a return of the minis, which were, of course, the much ballyhooed 1/10 size contract. It seemed like that was in the offing. The time was ripe for that. You guys decided to do one better. He said, forget about 1/10 size contracts. We're going to do away with the multiplier altogether. We're going to effectively make options 1-to-1 for effectively the first time. Why did you decide to go that far? Why not maybe go back to the minis first and then go farther beyond that down the road?
Excellent. So we did look at that, and one of the things that we thought was a little bit simpler for newcomers to the options market is the idea of, if you look at a screen and it says that the market is $3 bid, $3.20 offered, and you buy them, when you have a multiplier in there that is not displayed on the screen, it's it's kind of like, all right, so why can I not buy these for $3.20? Well, it's actually going to cost you $320 because of the 100 multiplier. And so going with the 10 multiplier doesn't really defeat that barrier for the newcomers. And also, just going to that price point, right? So we were trying to get a price point of about $3 for an at-the-money short-term contract, just to make it much, much more accessible, right? So if you look at the same XSP contract, which is the mini SPX, that's a $300 notional. If we went with the mini size, that would be a $30 notional. And, the idea here is we're really trying to get that price point as low as possible. And also, be able to get that price point with at-the-money type of options, with options that are near the money, that have a really good chance of being in the game when the outcome arrives, as opposed to if you have if you want to trade a $5 contract now, you have to be so far off the run that you're trading zero delta options. So we're trying to get access to not only the low premium or the low notional price, but also low notional price at something which is near the money.
And you mentioned some other interesting tweaks to the formula there, including fewer strikes and shorter term expiration. So let's dive into that a little bit. What are we talking about here? Are we talking about maybe, let's say, 10 strikes above or below the at the money and maybe only a weekly to start? What's the plan for these?
Yeah, we're looking at, call it Monday, Wednesday, Friday, and Monday. So call it 4 terms, all, right around that 7 days or less to expiration. And exactly that, I think you highlighted it well. We're looking at, call it 5 strikes for each term, that 100 delta, the 75, the at the money 50, the 25, and then of course the 0 or opposing, 100 delta put. And that's just to keep it simple. You look at SPX today and there's over, 10,000 different series that you can trade. That's needed for that product. That's needed for that institutional user. But if we're trying to introduce options to somebody that's never traded before, you got to make it more simple. And we find, look at it this way, 40 series, 40 different choices across just 4 different tenors. And we think that strikes the right mix.
And of course, you mentioned that the plan is to launch these in Q1 of next year around SPX, but I'd have to imagine if things work out well, the plan is to expand not just to other CBOE proprietary products like VIX, but above and beyond to a lot of the pricey products that people are trading options on right now, like your Teslas and your Amazons and your Alphabets and everything else, Rob.
Yeah, so just quick point out that these are going to be listed on a mini SPX underlier. So think 450 or actually 470 instead of 4700. Kind of aligning that with SPY, so that gets us the smaller notional there. Also, I would point out that there's no plan to list this on VIX. Nanos and VIX are not a thing for us. We're looking at broad-based indexes. So if we were to evolve into other products, and one of the things that is attractive for this is because we're looking at these broad-based indexes as the idea of European cash settled is something which we find very appealing. Not having to deal with settlement into physical shares. We can go into some of the details of like the workflows about trading a physically settled option and what you do when you end up in the money. But the cash settled aspect is something which we found was really, really appealing for the newcomers.
When these were first announced, I was pretty intrigued by these, and I put them out to our audience. We thought, hey, are you guys excited by the impending launch of these Nanos, these one-to-one, effectively no multiplier options? And I was kind of surprised. The audience was roughly 2/3 no and 1/3 yes. And, I thought about it for a while, and it does make sense if people have been around for a little bit. They probably lived through the previous incarnation, the previous attempt at this, which was, of course, the minis. And that was the last time the industry really rallied together around a smaller size contract. Unfortunately, it didn't work out for a variety of reasons. The market makers never really stepped up, so the spreads were too wide, so people had to really deal with a lot of slippage. If they wanted to trade these, it was more expensive to trade them. The brokers never really adjusted their commission, so again, it became more expensive to trade the mini. So as a result, this product that had a lot of promise ended up withering and dying on the vine. It seems like there still may be some negative perception on this lingering out there, guys. So what are we going to do to avoid a repeat of the minis with the Nanos?
No, I think it's a great question. But first, to address kind of your survey, I can't stress enough, and specifically for your listener base, like this product is designed for a completely new investor segment. So growing the pie rather than converting existing option traders to trading this product instead of something else. And to even take a step further, we're hopeful that many of your listeners who understand options and might even be a little bit more on the sophisticated range in their investment strategies might even look to the Nanos contract as a way to provide liquidity for this new growing, user market segment, like these new guys entering the space. And so that's just one piece there is just, it's this new group that we really want to give access on some of the other things, kind of to talk about the mini angle. One, we think we're addressing it by introducing a new symbol. The way minis used to be is they were a subset symbol of the existing symbol. So if you had Apple, the mini product was Apple 7. It was somewhat confusing of how the symbols were interlinked. And so by introducing a new symbol, something completely separate to look at, we think, one, that will help lessen the confusion. On the fee standpoint, that's something that we're working with the industry, our partners in the retail brokerage platform space. We can say that the fees from CBOE side on what we can control will be notionally in line with our bigger contracts. So we realize they can't be the same; they'll have to be reduced, and so that's at least something in our control that we can tackle from that standpoint. Michael, do you have anything to add?
Yeah, I totally agree there, and also, this new segment that Rob talks about, we're pretty convinced that this segment is here to stay. Initially there was some thoughts of, well, people are home during the early parts of COVID and they're just trading options because, they're not in the office. And, what we've been seeing is a lot of, stickiness and, also a lot of access, right? So people have access through applications and through online brokerages, and it's just become more pervasive. I like to talk about how I never really used DoorDash or Grubhub or even Instacart that much, before COVID. And now, even though, I do feel comfortable going into a store, we use DoorDash and Instacart for almost everything. And it's just like, once you start using it, you start to see where it's appropriate for your workflow. And we think that's the same thing for this retail customer base where, they have access to the apps, they have trading accounts, and we think that they're here to stay.
And to that end, Mark, just real quick, like we've spent the last 9+ months, I would say, getting to know this potential new user. And we've done it through market research with an outside consultant. We've conducted surveys. We've held focus groups. And we've really discovered that there is, a large investor segment out there that are interested in using options if they were more accessible. And so, for example, I know we all like statistics. Out of the people we surveyed, 75% who were familiar with options said they would use them if it could be done at a lower price point. And 71% said if they had less choices, it would be easier to trade options. And that kind of talks and goes back to the strike choices that we talked about earlier.
And Rob, you obviously come from a market-making background. You know how important the liquidity providers are to get on board with something like this. As I mentioned, that was kind of one of the missteps, it seemed like, with the minis. The market makers were clearly never really on board, so the markets never really tightened up the way they should have been. Obviously, this must be a big, important initiative for you guys. Are you hearing from the market makers that they're on board? Are we going to see tight markets from day one in these things?
Yeah, I think they, this product, unlike maybe more the institutional side products that CBOE has historically, come out with, this one's going to be purely demand-based. And if we can get the demand there, and if we can get this new user to come and play, then the market makers have all said they'll be there. The liquidity will be there. And so from us, we're heavily focused on the visibility right now, focused on making sure people know this is out there. And then in tune, focused on the education side. That's something we're heavily, invested in here at CBOE. And so one, we're excited to introduce, on-demand courses, videos, articles, all of that in the upcoming months out of our Options Institute. So our education piece here at CBOE. And then we're also exploring concepts like hosting, office hours where market participants can interact with a live instructor. Because coming back to it, it's that new investor again, maybe somebody that's not comfortable. So having that touch point with a live instructor, we think could be very beneficial.
I will definitely agree with you on one of those points you mentioned earlier. The symbology with the minis was a disaster. So if you could improve that, you have one leg up out of the gate, I would think. That was terrible the way the minis were rolled. I think we can all agree on that.
Yeah, Mark, that's like as a vendor at the time, it was very difficult for us. Then also it was also listed in the big products, right? So it's like you don't want to have Apple and SPY not be correct in your terminal or in your risk system. So yeah, it was definitely difficult, and people had to parse the symbols and stuff like that. So yeah, we're starting with a brand new symbol here, and that confusion should not be there.
And, I want to touch on something you mentioned earlier, because believe it or not, I do believe this is the first time we've really had a chance to check in with the CBOE post-pandemic. And obviously a lot has gone on. So before we keep going with Nanos, you mentioned something that has been a big talking point, obviously, for us on the network here for the last 18 plus months, which has been this explosion of retail traders. And now coming into 2021, the question everyone had was, can this party continue? It seemed like, as you guys mentioned, the reopening might be happening. People might be going back to work. This trading boom would maybe die off a little bit. And instead, we've seen it just continue to grow. It seems like this new class of traders is here to stay. I'm curious what each of your thoughts have been on this just remarkable, transformative explosion of new traders we've seen come into the options market since the pandemic. Maybe, Rob, we'll start with you.
Yeah, no, thank you. We're excited about it. I think, roughly retail investors are up 4 times in almost 4x in the past 5 years. And I always like the OCC stat that's been floating around, and it's almost 39 million option contracts traded today in 2021, and that's up 31% from last year, and the highest level since market inception since 1973. It's crazy, these numbers. But I think they're going to continue. I don't think we're going to see people leave the market just because the pandemic slows down and everybody maybe returns to a more normal style of what they previously remembered. You look at reports. I think CNBC reported that earlier this year that roughly 6 million Americans downloaded a trading app in January alone. Like, if they're downloading and they now have access and they have the ability to control their own financial futures, like, I think that empowers people, and that empowerment I don't think is going away. I think we're just ramping up.
And Michael, you've obviously been on the space for quite a while with FT options before your days over there at CBOE. What are your thoughts on this just transformative tsunami of volume we've seen out here in the options market over the last 18 or so months?
Yeah, I totally agree. And also, this is why we've brought Nanos to market, is that, we recognize that there's this user base. I know that you mentioned the one lot trades, and, we certainly looked at the one lot trades and tried to look at them when they were broken down in the smaller premium space, where $10 to $15 trades. And we were seeing these things be so far out of the money that, we really want to bring the accessibility for an at the money contract, and also the education that comes with it, right? So people understand if you have equities in your portfolio and into your retirement account, and you have got some skittishness about it, and you want to get, let's say, a protection on there, that there are ways to do that. And, the way to do that is not necessarily to buy a zero delta put, right? So we think that if we combine the accessibility of the products, we get the distribution out there, we have deep liquidity, and combine that with education, that's how we're going to kind of bolster the ecosystem so that there's more long-term sustainability to this customer base.
Yeah, Michael, do you remember what our SPY stat was? Mark, it was crazy. It was something like 80% of the flow in SPY was on our exchanges was trading inside of 2 weeks. And I want to say over 50% of the volume was one lots. And this is what really drove us to think about access and access points. If you're trading a one lot today, do you actually want to trade smaller, or is there actually demand to trade smaller and you're just capped at a one lot? And so that was a lot of what we were looking into when we first did the research starting, like I said, 9+ months ago.
That's right. I remember we were looking at a histogram, and we were looking at trades of 9 lots and under in SPY with 1 week and under to expiration that were near the money, which is where there was a big surge of volume. And when you look at the histogram of 9 lots and under, you'd expect there to see some 7 lots and some 6 lots and some 4 lots. And that was not the case. The one lots just completely dominated. And the average premium was let's say $160. And that kind of just got us looking at that and saying, what's underneath that? What is behind that? Is there pent up demand where people, don't have $160 to trade on a contract, but maybe have $16 or even $3? So that's the inspiration.
Yeah, that data certainly lines up with what we've been seeing on our numbers, and of course, anecdotally talking to our audience out there as well. You're right. There is certainly a demand, SPY 1/10 size product. Even that is beyond the scope and beyond the reach and beyond the budgets of a lot of these new traders, which again speaks to just how lofty these markets have become. But just to clarify for our listeners now, these are not live yet, these Nanos. We're expecting them sometime in Q1. Gentlemen, is that still the plan? And can we give them some insight early Q1, late Q1? What are we thinking?
That is the plan, Mark. Right now we're sticking with just Q1, mainly because we're working with a lot of our partners, the brokerage houses. I encourage any of your listeners or anyone else out there, friends of your listeners, please go to your apps, your brokerage houses, and ask them to make sure that they have access to the product if it's something that interests you. But we're working with many partners to make sure we're ready and we can hit the ground running. So we're sticking with Q1, but hopeful that it's early, but yet to be determined.
We're kind of coming up against it, but before we go, like I mentioned, we haven't had a chance to really check in with CBOE in quite some time. A lot's been going on over there since the last time we chatted with you. So really quickly, I had to get your thoughts on a couple other things. First, very recently, CBOE making its return, its much ballyhooed, much anticipated return to the world of digital assets with, of course, ErisX, which was announced October 20th. So a few weeks back now. I'm curious for you guys, just your thoughts on the potential and what that means for folks who are excited to see CBOE getting back in the digital asset game in some way, shape, or form.
No, appreciate it. We are very excited to get back into that space, and we see big demand. You saw in our press release many of the partners that we have lined up to really bring, our style of market into the digital space. And so we're excited to come back. A lot more to come. Stay tuned. But we've kind of only just begun.
And speaking of the digital assets, just really quickly, it just seems that in the last few weeks, everyone's been all awash and just giddy with BITO options. We just had the ProShares folks on yesterday on their Crypto Rundown program to dive deeper into that. To my knowledge, that was pretty much the fastest turnaround I've ever seen from a new product listing to options. It was somewhere in the 24 to 48 hour range. We actually had tradable options and a lot of volume coming on the heels of that. To your mind, Rob, is that the quickest turnaround you've ever seen out there?
It's definitely fast. Speed is of the essence lately. It seems like anything from access to your trading account all the way through getting new things listed. You got to stay tuned because it happens fast.
It is amazing. It just goes to show the evolving nature of the space. And I am curious, one more product question before I get you guys out of here. One of the other big questions that's been lingering in the world of volatility out there a lot has been, what's going to happen post 2018? Will the SEC ever approve a new flavor of inverse volatility product? Well, we did just see effectively a new flavor of XIV get approved by the SEC. That, of course, potentially a boon out there for all things VIX, including VIX futures. What are you guys' thoughts on the return of a new flavor of XIV and what that might mean for the volatility market as a whole going forward?
Well, we're always excited about, the volatility space, and let's call it volatility as an asset class growing. We're excited to see new entrants. We're excited to see, what that means for the VIX franchise and just, like I said, volatility as a whole. And so excited to get that launched. It's been a long time coming. I know the guys at Volatility Shares have been working hard on that for some time now. So we were excited to see it get approved and looking forward to making it live.
Well, gentlemen, that music means we have to get on out of here for today. I appreciate you taking the time to join us to talk to our audience about these forthcoming, very intriguing nanos. And as you mentioned, if our folks are intrigued, they want to learn more, maybe check out some of these office hours and these educational initiatives you were mentioning. Where should they go? What should they do, gentlemen?
Yeah, nanos at CBOE.com is for information there. That's on our website right now. And stay tuned. You can sign up for updates. And then also there's links off our website for our Options Institute and all the education pieces that we'll be rolling out in the upcoming months to come.
It looks like the listeners in the live chat are excited. They're saying they're excited about nanos and interested in trading them and learning more. So there you go, gentlemen. A little bit of excitement there from the live audience. Check them out over there. Nanos by CBOE coming hopefully sometime soon, hopefully potentially early in Q1 of next year. And, of course, stay tuned. Speaking of education, tomorrow is Education Wednesday on the network. Options Bootcamp, Options Playbook Radio coming at you for a twofer of education. Thursday, of course, back with This Week in Futures Options and episode 2 of the Option Block. Friday, Volatility Views. And for all of you out there in the secret club, you get Options Oddities after that. Then we're back next week with more pro Q&As, more education, more crypto, more everything else. And we'll see you back here next Tuesday for more Options Insider Radio.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.